Okay, hello there, traders, and welcome to our webinar, our midweek webinar on Wednesday. Sorry about that, a slip of my tongue, and I hope you guys are doing well in this middle of the week. It has been a very, very volatile week, so there's a lot to discuss. Now, today is the 19th of October, 2022, and my name is Kenny Simon with you from the Bretton Academy, or better known as the Bretton Financial Trading Academy, with you live here from Cyprus. And basically what we are doing every week is we're having at least 3 webinars just guiding you all, especially traders out there, to actually analyze, analyze the market. And we are on the midweek at this moment of time. And as I've mentioned, a lot has been happening. Inflationary mode has been happening. A lot of housing market collapse are being expected as well. We've just got commodity currencies together with precious metals going crazy. Commodities, talking about oil, the oil market as well, both Brent and WTI. A lot of geopolitical factors are actually just stirring the market, and we've got loads of volatility, of course. And with volatility comes opportunities, but we are always should always be on track with our trade plan and our step-by-step approach in researching and analyzing the market. So this is where I would like to guide you all, and we want to start off with the Forex heat map, and to get a bit of an idea, giving most of the traders an idea of the market, together with the news events as well as top 10 movers, for example, in the market. These are always going to be how I, as a trader, together with the traders that I am actually guiding through, to actually sort of scout out the market, to understand the market a little bit better. And this is where we need to always start with a trade plan. Now, if you have no trade plan, you're actually planning to fail. Now, this is why we have got loads of traders being stuck in the week, for example, and they have gone into single-mindedness of overly focusing on a single candle movement. This is the big mistake of traders out there, and we do not want traders to be trapped within a very, very volatile and opportunistic type market. We have got loads of trading opportunities out there, but preserving your capital is your #1 key. So we need to always be on our toes to understand the market first, not to go straight onto your technical chart and then go onto your technical chart and basically just going onto your candlestick charts and then looking at a single candle and then getting very tempted into trading it. Now, this is a very big no-no. This is where you'll get into building up your fear of missing out, which is also known as FOMO, F-O-M-O. This is what's been going on a lot. Now, when you get trapped into a trade, that usually is contributed by not picking the right pair to trade for the day. Now, picking the right pair or picking the right instruments for the day to trade does actually mean that you are able to understand the sentiments of the market. Now, the sentiments of the market, or the feelings of the market, has got 3 types: feelings, major feelings of the market, or major mood of the market. And these are fear, uncertainty, and greed. Now, greed would actually just drive the market upwards, and this is called a risk-on market. When you have a risk-on market, what that means is that majority of traders and investors are willing to take the risk. That's why they're switching on that risk appetite, and they are willing to just trade risky assets. Okay, so that is a risk-on environment. Now, people are getting more and more greedy. They're buying and buying and buying, thinking and feeling or believing that the market will still go up. So they keep on clicking onto the buy button, for example, and just keep on buying assets and instruments. So that is a risk-on market. A risk-off market is totally opposite. So you would have traders and investors flowing in their current investments out, flowing out from risky assets into less risky assets that we call safe haven. Now, safe havens are if it were to be the currencies, would actually be the would be the USD as well nowadays. Now, USD has actually topped up as a safe haven right now due to the pandemic and various other factors, geopolitical factors as well, when it comes to the war between Ukraine and Russia as well, that have already triggered the USD as a stronger safe haven nowadays. So hence the reason we need to be very, very careful in understanding the dynamics of what's been going on, or how the geopolitical scene is actually impacting economically and politically the markets as well. So a lot of dynamics have actually changed. I mean, a lot of us as traders, we have only been used to understanding logically the correlation or the negative correlation between the USD and then the gold and, various other things about the Canadian dollar and the oil. So we've been always following through traditional correlation models. And nowadays, unfortunately, that does not stay as it is, or it is just not something that would actually go on in this time of the market, because we are in a very, very dynamic complexity type theory movement of the market nowadays. So we cannot rely on any one tool or any one idea or concept because it just changes all the time. Okay, so let's get back to the heat map and to understand. I mean, behind me, as you guys can see, we've got the heat map going on, and this heat map is available on ten.academy. So you just go on to ten.academy and you will find that under the tool section, you will find the FX heat map. Now, the heat map has actually been very useful for me for the past over 10, 13 years of my trading. I've actually begun to stick onto heat maps and various tools in order for me to gauge the market first. So the main reason for the tool, like a heat map, is not to enter a trade. It's not to actually go straight onto your trading platform and start clicking it depending on what you would see as buying and selling signal. Now, I want to emphasize this a lot to you guys. This is not a tool for buying and selling. It's not a signals kind of tool. It's not telling you that you can go and enter and exit. Now, this is a trend gauging type tool, okay? A tool that would give you an idea of the current trend and the current movements of which side or which direction would a currency pair or a currency would actually be taking. So here on the ten.academy, very, very simple. We start off with the currencies on the left first, right? So we've got all these currencies here on the left. Now, most of the other tools in the other websites, for example, like in Action Forex or in other websites as well, they work almost the same in a way, meaning that the approach of looking at currencies on the left first would actually be your first step. So don't go onto a website with a heat map and start looking at currencies on the top here. Look at the currency that you want. Let's say you would like to know about euro. You start off with euro here, and then you look at it horizontally. All right. So when you look at it horizontally, what do you see? Do you actually see most of the blinking squares are actually red or green? Green means bullishness, red means bearishness, right? So here, for example, on euro, I don't see the blinking boxes so much, or highlighted boxes. They are all faded here. Only one box is highlighted or lighted up. But when we look at USD, we can see that it's all green standard colors. You guys can see that means bullishness all across. That means USD is more bullish compared to all the other currencies at the very top. Now, when you look at all these blinking boxes, for example, they are having numbers in it. Now, you want to pick the highest number, let's say 0.65 right here. And that basically shows that USD is most bullish against the GBP. So GBP is most weakest against the dollar, right? So there may be some opportunity there. And what that means is just to give us the initial idea of how bullish or bearish a pair could actually be, but not to go and enter a trade straight away. You would need to take it to the second step, which is to conduct a trend analysis, not a technical analysis, a trend analysis. A trend analysis, I will get back to the trend analysis later on, is when we are having it on our technical chart, whether on an MT4 or MT5, where you would apply strategies or an approach that I have introduced, and that usually uses the 3 EMAs, exponential moving averages, and I'll show you how you do that. It's really simple, but it needs to be taken through or across multiple time frame to get an overall picture of the trend, in order for you to confirm that this tool that you are actually using, whether or not it is this tool here on the 10 Academy or any other tools that would actually communicate to you about the trend, you would need to then confirm it with your trend analysis. So it doesn't actually work just single-handedly. It's not a stand-alone tool, okay? It needs to be confirmed, over-confirmed, and used as a sort of an approach that combines various other ingredients to successfully understanding the trend, okay? So it's not just one tool and then you just go on and click on your buy and sell. If you were to be doing that, that means you're gambling the market, as simple as that. You're not analyzing the market. If you've got a step-by-step approach in order for you to get a collective idea of what the trend is and enable you to actually pick the right pair, then you are analyzing the market to actually trade. So that means you're more a trader investor. If you are just jumping the gun and you are guessing which pair that you want to actually trade, or you basically have got no step-by-step sequence of step approach or no trade plan, then you are a trader gambler more. So it's your choice. I mean, there is no right or wrong. It's just what makes you happy and what basically makes you happy in terms of its results as well. Now, the most importantly is what you get out of any type of methodology. Do you actually get more freedom of time? Do you actually get to relax more or calmly and enjoyably trade, or you are getting very nervous from trading following the methodology? So you have to ask yourself that question. Psychologically, what has your method, your approach make you become? Okay, who have you become? Have you become more calm or more jumpy and basically more nervous and always having your heart and your eyes palpitating, for example? So this is basically what you would need to ask yourself on what you have actually decided to adopt, whether it's a strategy, it's a trade plan, a setup, because most of the time traders are confused between a trade setup and a trade plan. It does not mean that if you've got a trade setup, let's say you've got the indicators that you use, you are looking at this and you're looking at that, it does not actually mean that you've got a complete trade plan. You may have a trade setup without having a trade plan. Now, I'll give you a bit of an example because I see this a lot in groups and groups of members in groups, and usually they would actually show me loads of trade setup, and they are mostly 99.9% are technical setup. So that would actually be a technical setup, not a trade plan. A trade plan that would actually work best, in my personal opinion, would actually be steps that would take into account various other approaches. For example, it has to take into account fundamentals, tools to help you pick the right pair, understand the trend, the sentiments, and all that. And then it has to also include steps to actually do a trend analysis, because a lot of traders are very, very confused with technical analysis and trend analysis. You could do a technical analysis really well without understanding the trend, without actually even knowing which pair to actually trade best on that day, because a lot of traders still are believing that they can actually pick any pair they want and their favorite pairs are going to be their favorite pairs forever. Now, the way to do it in trading, you need to treat trading as a business. If you treat trading as a business, then you would need to actually trade highest moving, most volatile, and basically most clearly trending pair. That is how you would actually have consistency in trading. I mean, if you are actually looking at a pair that does not actually is not really moving in the market because it's not being concentrated or focused by the big boys, then it's no point trading that pair, because the way the Forex market move is through volatility, and volatility is the lifeblood of the Forex market. So volatility is created by risk events, by speeches by the big boys, hedge fund companies, banks, and various other factors. So we need to look at all these factors that have actually moved the pair for the day. And this is what we need to actually always be aware of, is to check the news as well with major headlines. What's going on in the UK right now? Are they actually going will their housing market collapse? What's going on in the US? Globally, there's a lot of countries are actually dumping the dollar at this moment of time. When would the timing be when the US drops? At the moment, it's not showing any signs of the US dollar depreciating, only because it's already taken into account not only the inflationary mode, but also its nature of becoming a stronger safe haven at this moment of time. Okay, so this is what we have to understand, and we have to actually go through the dynamics of what's going on at this moment of time in order for us to trade better and consistently. Okay, so let's get back to the trend, to the trends of the currencies through the heat map. And once we are done with the heat map, we'll go on to the charts and then do a trend analysis for the currency pair that we have picked. Okay, so I never have picked a currency just by guessing or because it's my favorite pair, mainly because this is how I have traded consistently, is when I have realized that we cannot actually just pick a pair without understanding what pair to pick based on what's been moving in the market. Okay, you have to pick it with risk events and trends. So looking at the heat map once again, we are looking at straight rows, right? I want everybody to understand that the heat map is a very, very simple tool to actually use to understand. Now you can see right behind me that we have got a straight row right here. Now this one is from GBP on the left, right? So GBP is showing me most highlighted red boxes, which basically means it's mostly bearish compared to the other ones. All right, so you've got a generic idea now that GBP is moving to the downside. It's mostly bearish compared to the other pairs. Now the next one that you can actually see really clearly is this one here on the USD, as I've mentioned. So when you are ready to consider trading for the day, no matter whichever time that you wish you want to trade, just take a look at the heat map first, not take a look at your charts. If you take a look at your charts, you may actually miss out the current trend, because at the time that you are wanting to trade, it may not be good timing or it may be good timing. So how do you know that? Is through the heat maps. Now, when the heat map is ready, having participation of traders coming in, and there's a lot of trading activities, and then the trend is building up, then you would see that it is highlighted all across like a straight row like GBP. Now, GBP is all red across. That means it's bearish compared to the other ones. And then you have CHF all red across as well. So what you want to look for is red across or green across. Green across, mostly green across, it's your buying opportunity. All red across is your selling opportunity, right? So now let's say we are on both GBP here. We've got USD all straight rows, a lot of blinking greens, GBP, a lot of blinking red, bearish or selling opportunity, and CHF as well. Now, NZD to some extent, yes, as well, but then we're looking at the highlighted ones. Most highlighted ones are for USD, GBP, and CHF, right? So let's start off with USD. Now, USD, when you look at USD as a row, then you look for the highest number. Highest highest number that I can see is 0.6 right here. It's USD versus CHF. Now, USD versus CHF means that USD is more bullish than CHF, giving you more buying opportunity for USD. But again, once again, do not go straight onto your chart just yet, because it's just too early to do that. You need to take your time and learn to be patient, and also being focused on what you need to gather in terms of information on the first step. The first step of the P, the first P is your psychology of the market, which relates to trend as well, and the sentiments, right? So here USD is looking like it's building up and up and up. It's highlighted a lot, and it is where we need to focus on. So USD also talks about major crosses meaning all the currency pairs that have got USD in it. So your USD CHF, AUD USD, NZD USD, and various others as well that has USD in it. Now, especially GBP USD as well. Now, we can see that we've got some pairs to analyze. Now, let's start off with the USD crosses. USD crosses is best for us to look at USD CHF and also GBP USD. Okay, so USD CHF and GBP USD for us to do a trend analysis on. Now, the next one is we go on to GBP as well. Now, GBP, the highest number that I can see is the one against USD. So again, GBP USD is good for us to look through and maybe leave the rest for later on. Now, CHF, we have got a big number. Biggest one is the 0.47. Again, it is with the USD. So the way I look at it is your USD crosses, but we can start off with the USD, CHF, the GBP USD, and also the CHF versus the USD, or the USD CHF. So these two pairs first, and then we can actually warm it up. The reason for us picking out only one pair or one currency and look for another currency, make it one pair first, is because we can always look into a correlation table to pick out more of which currency pair to trade for the day, right? So we are not really worried with, if you're concerned about, oh, how many pairs we can actually trade today, that would actually encourage you to have FOMO, a fear of missing out. So try not doing that. Always start off and steady yourself, breathe, relax, look at the first things that you need to do, which is the heat map. Now, the heat map and the news, they go hand in hand, right? So whatever that has actually been communicated in the news, whatever that is a big news at the time, would actually be one that would be highlighted as well on your heat map. And if they match, it's even better. Then you take them onto your chart and do a trend analysis, and everything will start to be like a puzzle that is actually coming up with a big picture for you. So it's all about, oops, a second. It's all about fitting in puzzle pieces as well, right? So it's all about taking each one puzzle piece, for example, like the tools, the top movers, your economic calendar. All these are puzzle pieces that you would actually put onto your mind's eye, so that it becomes like a big picture for you to actually understand the trend and the trend's direction. So this is what we're doing. Hence the reason we need steps, and we need the PRIC trade plan in order for us to gather up the right puzzle pieces, so that we get the end picture for us to click on to either a buy, a sell, or not to trade at all for the day. Okay, so we've got three decisions that we can actually make: to enter or not, to enter a buy or a sell, right? So you've got your buy decision, your sell decision, or holding decision of not trading at all as well. Or the holding decision could also be a pending order decision. That means you're not trading on the spot, you're not using your market execution option, but you are actually trading with a pending order. Okay, I hope that's been clear for you guys. Now, what's important for us right now is also to get a little bit of an idea of what's been hot in terms of the news. Now, I'm not saying that you guys need to read a lot. It's best that you would read and research and read more only after trading hours, because during trading hours, it's probably best for you to focus onto the tools. Now, I think, let's say let's get back to here, and I would like to also share with most of the traders that when it comes to news, it's not necessary that you go on to different news portal. Of course, some of us have got the luxury of having your Bloomberg, CNBC, CNN, for example. That's nice and good enough. But also, if it comes to researching and reading, it's best to also type keywords in there. Type keywords that you could also see on the economic calendar. So, for example, if we were on the economic calendar right here, because I've got, I think, my dashboard on the 10 Academy. I've got a little bit of a glitch going on. Give me a second. Let me just see. All right. Just not to waste time right there. Let's just get to the economic calendar here and get the keywords in terms of the news, or not news, but your data releases that's due to be released today, right? So this is where it's really important for us to understand that we can actually type that economic data release news onto Google and then click on the news tab to find whether or not we have got any news that relates to that economic data. And here, for example, today, Wednesday, October the 19th, we are expecting the Bank of Canada's Consumer Price Index, which is categorized as really very, very important, right? We've got high volatility expected right here. If you click onto it, it does actually tell you that it's released by the Bank of Canada. It's called the Core Consumer Price Index, and it excludes fruits, vegetables, gasoline, and fuel oil and all that. And now it says here that these volatile core 8 are considered as the key indicator for inflation. Now we're talking about inflation, so it's really important. So it's only became more important here. So that's going to be released. So what you can actually do very easily is type in Consumer Price Index Canada. So we go on to Google right here. So we've got CPI Canada, right? And you just click onto that and click onto the news section right here. Now, here you could see 18 hours ago, an hour ago, a release by FX Street as well. We've got 2 days ago, economists expect inflation to ease in September, but remain, whatever they are actually saying, you need to click onto it and then you can actually read more. But let's say an hour ago, it says here, USD/CAD, large surprise in Canadian CPI needed to lift the loonie. Now, remember, loonie is the nickname of the Canadian dollar. Now, here it's a news by Credit Suisse right here. So it says today's Canadian Consumer Price Index data will offer markets opportunity to recalibrate their expectations for Bank of Canada. So what you can also do is you can always use all the keywords that is actually said about the CPI. It says Bank of Canada, right? Okay, and you can look at inflation and just type that and click onto the news, and you can see that we have got business outlook survey. It gives you a little bit of an idea what's happening to inflation. That's 2 weeks ago and why it matters. It's giving us a hint right there. So, but because it is actually coming out, but it's not giving us the hint that it is actually concentrated or focused on in your top movers as well as your what do you call that, the heat map. So here, for example, if we were to be on the heat map, now if we go on to the heat map, let me just try getting into the 10 Academy first. Now it's probably the best thing to do is to get into your 10 Academy. I just got a bit of a glitch going on here, not sure. So not to waste time, we go on to the Action Forex just for the time being, but everything is in your 10 Academy. So it's always best to go onto your 10 Academy, click onto news, economic calendar, FX heat map as well, and all the other tools that you would need. So here, for example, if I were to go to the heat map here on Action Forex, I just want to look at Canada as well, right? So if I go on to the generic one right here is all mixed up colors, as you guys can see. But then when you go on to USD against JPY, see, we start off with the currency on the left again. So USD versus JPY, USD is more strong or stronger in terms of its bullishness against the JPY. So you've got only one. We always want to look for one row that has a similar color, especially the darker color. Now, the darker blue is your strongly bullish signal, and then your dark red is your strongly bearish signal, not trading signal, just trend signal. Okay, so here JPY the same for USD. We've only got two of these ones in this heat map here, but when you go on to the next one, action bias is also another type of heat map, more of a signal type, giving you an idea. You see here it has, you want to look for all four rows. You know, the rows are your time frames right here, 1 hour, 6 hours, daily and weekly. So if you've got it all the same colors, same arrow up in one row, that basically means that it is bullish on the USD JPY. So you see on the heat map and also on the action bias tool, we are looking at USD JPY giving us very clear signal that is on the upside. So when it gives you a clear signal that is upside, the trend is up, we need to confirm for ourselves, and hence the reason we need to do a trend analysis, right? We don't do a trend analysis just for the sake of it. We do trend analysis to confirm what we see on from the tools. Okay, that's why we do a trend analysis. So the rest has got some straight rows, but they didn't start off with a 1 hour chart. I would prefer for it to have a straight row like this and all colored up. So USD JPY is the only one at this moment of time. So if we were to look at that, I mean, that's reflected on various other currency pairs as well, especially gold. Now, gold is heading to the downside, looking really nice with the selling opportunity there. I have closed some trades with a loss. I've closed most trade with a profit. Basically, what have actually happened because of the volatility as well, and me not setting up my TP at that time, I had a bounce of a couple of trades that basically went against me only because I didn't actually place the right TP, the TPs that I have planned. So hence the reason I've always tell this to traders: your exits, your TPs are more important than your entries. That's why I say that, because if you don't monitor your TP, your right trade or your right analysis could go the wrong way, right? So it's really important for us to monitor that. Now, let's take a look at USD JPY, because USD JPY is the one to focus on, because that's what is showing us clearly in terms of the uptrend in the heat map, also concentration of USD JPY in the top 10 movers by investors and traders as well. So let's take a look at it from a zoom out perspective. As you can see right behind me, it's really simple to understand that the USD JPY is on an uptrend. And look at that angle. This angle right here is just simply really beautiful. It's beautiful because the angle is at 1 o'clock type angle. And this is a strongly trending angle, okay, to the upside. So we are looking at the 3 EMAs as well. The 3 EMAs are the exponential moving averages of 50, 100, and 200. They are all on the upside as well. Like the candles, majority of candles are also moving same direction. The 3 lines are looking really nice. They're not touching each other as well. So this is a clear uptrend on the 1 hour chart. And it's only on the 1 hour chart. It doesn't mean that it's an uptrend overall. Okay, until we actually look at multiple time frames. So we're looking at the price as well. You can always look at the risk side of it straight away as well. Like, let's say if it is trading now, USD JPY is trading now at 149.39. Now, this can be applied to any pairs that you are looking at. When you're looking at a pair and you are thinking of whether it is better to buy or sell, don't think that yet. Think of the trend first. So you do a trend analysis straight away, and then you also look at the price on the right. You need to look at where is it trading? Is it trading in the middle of which psychological number? So it's trading at 149.39. As it goes up, it will bump into the 149.50 psychological level. So I need to mark that. I'll mark that in red to notify us of a potential reversal level. Okay, so that is at the psychological level of 14950. So I'll draw it as a resistance line as well, and 14950 right there. Okay, now as prices falls, it would then be bumping into the 149.20 psychological level. So the same way we do that with a different color, of course, that would mark your potential support level. Okay, so there you go, 20 right there. So now we have got two lines. Let me just color it blue to indicate a support level. That red line is to indicate a psychological level that is a resistance level. So here we have got two lines right there. Okay, so now we are in a better position to understand that the USD/JPY on the 1 hour chart especially is trapped between two psychological level, the price, and that is at 14950 and 149.20. Now, once you have these two lines, then you understand that if at all we are looking at it in a multiple time frame and it is on the upside or an uptrend. Now we look at all the tools, it's showing us uptrend for USD/JPY, right? But it could also reverse. And where could it actually reverse? It could reverse at 14950 area. Now look at what's going on now in the 1 hour chart. Why did the price just got stuck at that area there? Because it is really close to the 149.50 psychological level. Only after it breaks out and go across and go above the 149.50, let's say 10 pips above at 149.60 onwards, then it would then signal to us that more buyers are coming in and more interest of buying to push the market up for the USD/JPY. Okay, so at this moment of time, not just yet, because the ideal buy price should only be 10 pips above 149.50, which is 149.60 would be a better buying price. Okay, so that's what's going on at this moment of time. So that's only on the 1 hour chart. Now, once you are clear with what has been going on the 1 hour chart, you then compare it with at least two more time frame up, the 4 hour and the daily as well. You can start off with the 30 minutes as well. It does not matter. You can start off with the 15 minutes, go right up to the monthly as well. It doesn't matter when you're doing a trend analysis. So when you go onto the 4 hour chart, and on the 4 hour chart, you have got the price trading there still in the middle of the two lines as well. And you can see that what's most important is to look at how the what's the angle of trading, or are the three lines still the same as what you see on the 1 hour chart? Now for me it looks similar. It gives me the idea that it is still picking up on the trend to the upside as well. So clear uptrend for 1 hour and 4 hour chart. Now we go on to the daily chart, and once you go into the daily chart, you could see that it only gets stronger. The angle just goes up like this, and it's towards the 1 o'clock trend, we call it, because on your watch, if you look at the 1 o'clock, the number 1 on your clock, on your watch or clock, you could see that that is the angle that is really bullish if it is trading on that angle, that kind of a steepness. Okay, so that steepness, this is 2 o'clock, this is 3 o'clock, obviously, because you've got your 3 right here. So 2 o'clock, 1 o'clock, 12 o'clock, right? So that's how you look at the angle visually as a trend indicator. Okay, so 1 hour, 4 hour daily, the trend only gets stronger. So it is a clear, not strong just yet, but clear uptrend for the USD/JPY on 1 hour, 4 hour, and daily. Now, how do we know whether or not the trend that we're seeing now is strong or not. We can actually use an indicator, simple one, still a lagging indicator. It's called the ADX. It stands for the Average Directional Movement Index. So we go back to the 1 hour chart again, as we do the trend analysis on 3 time frame. We can also do the trend strength indication as well, based on 3 time frames. Okay, so here we just click on to insert indicator and then go on to trend, click on average directional movement index. It's abbreviated to ADX. Okay, now all you need to do here is click onto the level area and click on to add. Once you add, you just go into this box here under level and click and type in the number 25. So we just add that and we click OK, and you would be getting the indicator below here. As you can see all this, we only want to look at the blue line, not the dotted orange and the dotted yellow line. Okay, so we would like to know whether or not, for example, if you guys can see, whether or not on the right side, the end of that ADX indicator, we've got the blue line above the level 25. So the level 25 will have that dotted horizontal white line. Is the blue line above that line? If it is, then the trend that you're looking at is strong. So now you can say that on the 1 hour chart, it is a strong, clear uptrend. Why? Because we got the ADX as well, is giving us the indication that that line is above the dotted white line. Okay, so do we have a strong trend on the 4 hour chart? The answer to that is also yes, because the blue line has made a bit of a reverse, but it's above it's above the level 25. Then we do the same for the daily chart. The daily chart is also moving really nicely upwards. So it's indicating to us that it has strength for the USD to go up and up and up. It has strength. That means it has momentum, and it doesn't make us wait so much. So it's got some movement expected to happen consistently. Okay, for now. So here we go. Now we have got all these trend analysis done. Then what we would need to do is to look at where do we actually start trading? Where would actually be good location is really important to actually place our trade for the buy. Now I have already indicated to all of you that we are in a bullish trend, of course, but the current USD JPY price is trapped between 149.50 down to 149.20, and these are psychological levels. So because it's an uptrend, I would like to only look at opportunities to buy, right? So I wouldn't buy right now because it would, just maybe reverse at 149.50 area, because that's where the psychological level is. So what I would need to do is go on to bigger time frame to look to my left and to see whether or not I have got any referral point for previous bullish mother candles and things like that. So let's just look at it. Okay, it's not much referral point to the left. So what we would need to do is to do pure price action basically, and to see whether or not we could also go on to lower time frame to consider. Okay, we don't actually have reference point to the left. So what we could actually do is to zoom it more and perhaps look at the daily or the 4 hour, and to look at where we could actually place an upward type movement will only be at 149.60. So once it actually goes upwards to 169.50, because we don't have any referral point to the left, it's probably best to look into trading 30 to 40 pips, but based on psychological numbers as well. So it's a little bit too early to say at this moment of time, because we would like to know whether or not there is a reversal coming up. Now, in order for us to understand and know a little bit whether or not we have a reversal, you can then use the stochastic tool right here, and you don't need to change its parameter, just on default itself, and look for divergence. Do we have any divergence? Now, on the 4-hour chart, it does look to me like there is a possibility of a divergence. Let's see, because here, for example, we have got a high and a lower high, but here we've got a high and a higher high. So that does look like on the 4-hour chart, anywhere between 1 hour to 4 hours time, there may be a possible reversal that may take place. So we go on to the daily chart as well, and we want to look at any divergence at all. Now on the daily, we don't really have a divergence. That means opposite of the candles and what you see on the stochastic. So on the 1 hour chart, does not look like it as well. So it's only anywhere within the 1 to 4 hours time. It may be a possibility of a reversal, but I would think a smaller type reversal on price, and that reversal could possibly be at 149.50 area, which exactly the wick at this moment of time is just touching the 149.50 area, especially on the 4-hour chart, as you can see, and also the daily chart. So that looks like a strong area that it might reverse from. Okay, that is basically for USD JPY. Now let's take a look at gold, and with gold, it is actually following through the ABCD geometric pattern, bearish geometric pattern, quite well. It's trading at 1641 at this moment of time. I'm just foreseeing a potential support. So if you are already selling gold at this moment, XAU versus USD, I would like to point out the potential reversal to actually happen at 1635 area. So anywhere between 1635 and above, you should exit anywhere above 1635, mainly because that blue line here that is marked at 1635.01 is exactly at the opening price of the bullish mother candle that you can see in the past. This bullish mother candle right here has happened this year itself, September. So last month. So that's quite a significant one, because it has brought prices open at 1635 and went above 1654 and above, and really close to 1660. So that was quite a significant jump of price with a bullish mother candle. So we want to respect that area, and hence the reason we've got selling opportunities, of course, but then we want to look at exiting or take profiting before price reaches 1635.01. Okay, so 1636 would probably be better place to exit the market. So we've also got really nice happening on the Euro JPY chart, especially with the bullish ABCD pattern. I was trading at 129.08 area right here, so that took it really nicely, a very nice gap of the market with 140 plus pips potential. So that was a very good buying opportunity. But again, that was all calculated, evaluated from the trends perspective first. Okay, so at the time, we had all the candles, most of the candles, and current price above all the 3 lines across all time frames as well. And together with that, we had loads of hints on the news giving rise to the euro versus the JPY, not only news from the euro's perspective, but also from Japan. Japan got even weaker. They're getting rid of the dollar in their central banks, as well as selling off US Treasury and bonds. And basically, there's a lot of weakness in its yen at this moment of time. So with that, basically because of the inflationary mode from the US, it's just driving the price down for JPY. So that is a good fundamental fuel to drive down the JPY. And then we have got fundamental reasons from inflationary mode to raise or rise up the euro. So we have got fuel to rise up the euro, and we got fuel from Japan to drop the yen. So that's a very good balance of price right there. One's going up, one's going down, and it's going down and up strongly as well. And hence the reason we had a very nice, clear bullish pattern there, and triggered the price at the centroid area right here, and then the TP was at the D point. So this is an A point, B point here, C and D, and you are only will be trading the C to D area upon the trigger of the price at the centroid area. So that was definitely a very nice trade right there with 140 plus pips. The reason for that movement to go to the upside as well is that you would need to look at this area right here previously as well, whether or not we had loads of bullish type candle, mother candles as well. And as you can see, that was a drop there. So the upcoming one was an upward type movement, and then downward movement, and then upward movement right here. So it usually goes, hand in hand with what has actually happened the last time as well. So within a range, if we've got a downward trend within that range, then we are expecting an upward movement within that range again. So it's it's intermittently moved, so downside and then upside and vice versa. Okay, there you go. So that is for the chart that we have, Euro JPY. And let's take a look at Euro CHF as well. Now, Euro CHF right here is not the pair that we would actually be picking as of today, mainly because it's not showing us of a good possibility for opportunities to trade on this pair. So we are concentrating mostly on major pairs. As you guys know, guys and girls, major pairs are pairs that would have the US or will have the USD in it. So USD CHF, USD JPY, we've got GBP USD, and all the rest, Antipodean currencies, AUD USD and NZD USD as well. Okay, there you go, guys. I think that's all I have for you guys. So any questions at all for today? Any questions? Do we have any questions out there? No questions. Okay. So if no questions, what we will do is to end this session for today and see you guys again on Friday's market wrap-up session. And we've got loads to share. And for any other questions that you may have, you can always comment on the YouTube channel itself, the comment section within the YouTube channel of Bretton Financial Trading Academy. With that, I thank you for your time, and we'll see you guys again on Friday. Happy